Which of the following best defines systematic risk? Option A, risk that affects the entire market and cannot be diversified away. Option B, risk unique to a specific company or industry. Option C, risk of default on a bond. Option D, risk of currency fluctuation only. The correct answer is A, risk that affects the entire market and cannot be diversified away. Under the Uniform Securities Act, an investment advisor representative, IAR, is generally required to register in a state if they, Option A, only manage accounts under $1,000. Option B, have a place of business in the state and provide advice to clients there. Option C, work exclusively with institutional clients. Option D, are employed by a federal covered advisor only. The correct answer is B, have a place of business in the state and provide advice to clients there. Which federal act primarily regulates investment advisors who manage $100 million or more in assets, federal covered advisors? Option A, Securities Act of 1933. Option B, Securities Exchange Act of 1934. Option C, Investment Advisors Act of 1940. Option D, Investment Company Act of 1940. The correct answer is C, Investment Advisors Act of 1940. The Uniform Securities Act primarily governs, Option A, Federal Registration of National Exchanges. Option B, Federal Reserve Monetary Policy. Option C, IRS Retirement Account Rules. Option D, state-level regulation of securities, broker-dealers, and investment advisors. The correct answer is D, state-level regulation of securities, broker-dealers, and investment advisors. Which of the following is generally considered a fiduciary standard of care? Option A, acting in the client's best interest at all times, even above the advisor's own interest. Option B, recommending only suitable investments. Option C, disclosing conflicts only when asked. Option D, charging the lowest possible commission. The correct answer is A, acting in the client's best interest at all times, even above the advisor's own interest. Modern portfolio theory, MPT, primarily focuses on, Option A, timing the market to avoid losses. Option B, maximizing return for a given level of risk through diversification. Option C, picking individual stocks based on technical analysis. Option D, eliminating all investment risk. The correct answer is B, maximizing return for a given level of risk through diversification. Beta is a measure of, Option A, a bond's sensitivity to interest rate changes. Option B, a fund's expense ratio. Option C, a security's volatility relative to the overall market. Option D, the correlation between two unrelated assets. The correct answer is C, a security's volatility relative to the overall market. Which measure of bond price sensitivity to interest rate changes is most directly assessed by duration? Option A, credit risk. Option B, liquidity risk. Option C, reinvestment risk only. Option D, interest rate risk. The correct answer is D, interest rate risk. The efficient market hypothesis, EMH, suggests that, Option A, security prices always reflect all available information, making it difficult to consistently outperform the market. Option B, markets are always inefficient and easily beaten. Option C, only insider information affects prices. Option D, technical analysis always outperforms fundamental analysis. The correct answer is A, security prices always reflect all available information, making it difficult to consistently outperform the market. Which of the following best describes standard deviation in a portfolio context? Option A, a measure of an investment's average return. Option B, a measure of how much an investment's returns vary from its average return. Option C, a measure of correlation between two securities. Option D, a measure of a bond's yield to maturity. The correct answer is B, a measure of how much an investment's returns vary from its average return. The Sharpe ratio is used to measure, Option A, total return only. Option B, dividend yield. Option C, risk-adjusted return. Option D, credit quality. The correct answer is C, risk-adjusted return. Which of the following retirement plans is subject to ERISA, Employee Retirement Income Security Act, requirements? Option A, a traditional IRA. Option B, a 529 college savings plan. Option C, a health savings account. Option D, a 401k plan sponsored by a private employer. The correct answer is D, a 401k plan sponsored by a private employer. A wash sale occurs when an investor, option A, sells a security at a loss and repurchases a substantially identical security within 30 days before or after the sale. Option B, buys and sells the same security on the same day. Option C, sells a security at a gain. Option D, transfers assets between two of their own accounts. The correct answer is A, sells a security at a loss and repurchases a substantially identical security within 30 days before or after the sale. Which of the following economic indicators is considered a leading indicator? Option A, unemployment rate. Option B, building permits. Option C, corporate profits. Option D, GDP. The correct answer is B, building permits. Which tool does the Federal Reserve use to directly influence the rate banks charge each other for overnight loans? Option A, discount rate. Option B, reserve requirement. Option C, federal funds rate target via open market operations. Option D, prime rate. The correct answer is C, federal funds rate target via open market operations. An inverted yield curve, where short-term rates exceed long-term rates, is often viewed as a signal of, Option A, economic expansion. Option B, rising inflation only. Option C, falling unemployment. Option D, a potential upcoming recession. The correct answer is D, a potential upcoming recession. Which of the following best describes asset allocation? Option A, dividing investments among different asset categories such as stocks, bonds, and cash. Option B, selecting individual securities within one asset class. Option C, timing purchases to avoid market downturns. Option D, diversifying within a single stock position. The correct answer is A, dividing investments among different asset categories such as stocks, bonds, and cash. Under the Investment Advisors Act of 1940, the disclosure document that an advisor must provide to clients describing fees, services, and conflicts of interest is called Option A, Form U4. Option B, Form ADV Part 2, the brochure. Option C, Form 13F. Option D, prospectus. The correct answer is B, Form ADV Part 2, the brochure. Which of the following is generally exempt from registration as a security under the Uniform Securities Act? Option A, common stock of a private company. Option B, corporate bonds sold to the public. Option C, U.S. government and municipal bonds. Option D, mutual fund shares. The correct answer is C, U.S. government and municipal bonds. A de minimis exemption under the Uniform Securities Act typically allows an investment advisor to avoid state registration if they, Option A, manage over $100 million. Option B, have an office in the state. Option C, advertise in that state. Option D, have no more than a small number of retail clients in that state within a 12-month period. The correct answer is D, have no more than a small number of retail clients in that state within a 12-month period. Which type of trust allows the grantor to retain control and modify or revoke it during their lifetime? Option A, revocable living trust. Option B, irrevocable trust. Option C, testamentary trust. Option D, charitable remainder trust. The correct answer is A, revocable living trust. Which of the following best describes custody of client assets under investment advisor regulations? Option A, simply providing investment advice. Option B, holding, directly or indirectly, client funds or securities. Option C, recommending a custodian to a client. Option D, reviewing a client's account statements. The correct answer is B, holding, directly or indirectly, client funds or securities. Which of the following investment vehicles typically offers the greatest liquidity, since shares trade throughout the day on an exchange? Option A, open-end mutual fund. Option B, unit investment trust held to maturity. Option C, exchange-traded fund, ETF. Option D, non-traded REIT. The correct answer is C, exchange-traded fund, ETF. A client's risk tolerance primarily reflects, Option A, the client's legal ability to invest. Option B, the client's tax bracket. Option C, the client's age only. Option D, the client's willingness and psychological capacity to endure investment losses. The correct answer is D, the client's willingness and psychological capacity to endure investment losses. Which of the following best describes dollar cost averaging? Option A, investing a fixed dollar amount at regular intervals regardless of price. Option B, investing a lump sum all at once. Option C, selling securities to lock in gains. Option D, averaging the cost basis of only losing positions. The correct answer is A, investing a fixed dollar amount at regular intervals regardless of price. Which of the following is a characteristic of a Roth IRA that differs from a traditional IRA? Option A, contributions are tax deductible. Option B, qualified withdrawals are tax-free rather than taxed as ordinary income. Option C, contributions are mandatory after age 72. Option D, there are no income limits for contributions. The correct answer is B, qualified withdrawals are tax-free rather than taxed as ordinary income. An advisor who recommends investments primarily to generate commissions for themselves, rather than to benefit the client, may be in violation of Option A, the prudent investor rule only. Option B, the wash-sale rule. Option C, their fiduciary duty. Option D, the Securities Act of 1933. The correct answer is C, their fiduciary duty. Which of the following best defines capital gain? Option A, the interest earned on a bond. Option B, the dividend paid by a stock. Option C, the par value of a security. Option D, the profit realized when a capital asset is sold for more than its purchase price. The correct answer is D, the profit realized when a capital asset is sold for more than its purchase price. In economics, the term GDP refers to Option A, gross domestic product, the total value of goods and services produced within a country. Option B, government debt position. Option C, general deposit percentage. Option D, gross dividend payout. The correct answer is A, gross domestic product, the total value of goods and services produced within a country. Which of the following best describes correlation between two securities? Option A, a measure of their combined dividend yield. Option B, a measure of how their prices move in relation to one another. Option C, a measure of their combined market capitalization. Option D, a measure of trading volume. The correct answer is B, a measure of how their prices move in relation to one another.